Stephen Wieting is Managing Director of Economic and Market Analysis at Citigroup. He joins us this morning. 9 quarters of declining profits. Is that going to turn around this season?
Oh, I think if you look at profits on a year-to-year basis, we will be much, much higher this fourth quarter than the year-ago period. But profitability has been rebounding all year long on a sequential basis.
But a lot of that has come from just cost cutting. There's a tremendous amount of cash on the books as a result of the belt tightening in the corporate world. Are we going to see top-line growth return?
Oh, I think you'll see some sequential top-line growth, as we have, in fact, for the last couple of quarters. But just bear in mind that profits are about 4 times more volatile and more cyclical than revenues. So profits are always going to rebound faster than revenues do. And it isn't cost raising that made profits go down. It's this sudden absence of sales, which really goes to the bottom line. You get modest increases in sales. It's never going to be as big as the profit recovery. And it flows through the bottom line and comes back pretty sharply.
Well, you're right to point out that we've seen some uptick, some come back in top line, some of that just a comparative story. But put this in context to where we were in mid-2007. If we're judging normal, let's go back pre-crisis. How is that going to stack up this quarter versus mid-2007?
Well, it's hard to call mid-2007 normal. That was the absolute peak in the cycle. We were at $92 annualized per share in the first half of that year.
So what is normal? How do we judge that?
Well, I would forecast and model mid-cycle earnings in 2010, where capacity has actually increased since 2007, as about $80 per share. This year, we're expecting $72.50 per share. So we are still pretty far from even mid-cycle earnings in our forecast.
So sector-wise, break it down for me, because much has been made about what we're seeing play out in the Treasury market in terms of the yield curve steepening. That's really raised some hopes about financial leadership here in the marketplace. Is that where you're seeing the most optimism play out? What do you feel strongly about right now?
Well, I would break it down between financials and non-financials. In financials, we always see, and if you look back at history, financial profits fall first, and then non-financial profits follow. They rebound first, and non-financial profits follow. They also happen to be very leveraged, and they're much more volatile than non-financial profits. But that part of it is, diversity across the whole economy. One thing is, if you look at profit levels in the fourth quarter a year ago, they were utterly decimated in the financial sector. Losses were about as large as the entirety of profitability for all non-financial firms. That's not expected this time, though the levels may not even be as much as expected a few months ago. Now, if you look at non-financials, in the third quarter on a sequential basis, non-financial profits rose 13.7%. The forecasts for the fourth quarter are only up 5.3%. So we easily think that the rebound in utilization in the economy, where the existing capacity of the economy is utilized more profitably, that you're going to get stronger results, and that these earnings estimates for the current quarter are, clearly too low. That's a different story if you look out a year, but it is for the near term. I think that estimates are actually low, and they're not showing the full flow-through of the cyclical recovery.
Now, there is a tremendous amount of capacity out there. I was speaking to Michael Arenstein of Oscar Grus just last week, who said that he was looking for potential signs from corporate America that perhaps the capacities that's there and the uptick in buying that we're seeing among consumers might indicate hiring would be happening in the quarter ahead. Do you foresee that? We
do. I bear in mind that, again, the financial system, broad financial conditions lead employment by a full year. And that's a very painful year for the economy and for employees in the period where it lags behind. And, I know that the employment report for the December period was weaker than expected, but it was too early to expect employment gains as early as the fourth quarter.
Thank you, Stephen.